The price of the New Zealand versus US dollar continues its move to the upside after bottoming on Monday within a few pips of its low price from 2022. The move since that time has taken the price above the 100 and 200 hour moving averages and today above a key swing area. I will talk about that progression and where we stand now from a technical perspective. So let's get started. Just to put things in perspective, I'm looking at the weekly chart. Take a look at the low price from 2022. That low price came, or today, the week's low price this week came within a few pips of that level, found support buyers, and it pushed back to the upside. You get to see what that action looks like by taking a look at the hourly chart of the New Zealand versus US dollar. And as mentioned, the price in trading this week on the move back to the upside first got above a swing area right through here, which is defined by a number of different swing lows and swing highs going back in time. It alternates between support and resistance before returning or falling back below that area and trading on Monday and moving down to our low price. That rotation back to the upside traded above and below that yellow area. But the last thing that we did on this corrective move to the downside was find support against the low of the swing area, and it started a rotation to the upside. That move to the upside took the price above the 100 and 200 hour moving averages and traded yesterday. But you could see how the price kind of consolidated around that 200 hour moving average into the Asian session today. And ultimately bottoming against a 61.8% retracement and moving one last time above that 200-hour moving average, finding support buyers, early support buyers against it right here, and pushing further to the upside. The move to the upside then moved to another target area up here, defined by, again, different swing levels, including all these swing highs forming this ceiling through here. We broke above the ceiling here, and that was more bullish move to the high price that we saw toward the end of January, but then came back down below that area, traded above and below through here before finally deciding that the downside was the way to go. We got a confirmation on this high right here before going into the weekend and gapping to the downside. So we moved back to the high of this swing area through here, backed off, and now we're trying to break even further to the upside in the U.S. session, extending the bullishness above this 0.5683 to 0.56917 level. What next? Well, the easy answer to that is stay above this yellow area, keeps the buyers more in control. It's kind of like staying above the 61.8% retracement level, kept the buyers in control, and the price pushed higher. So if that can happen, if we can see either a corrective move into that area and finding support, or just moving to the upside from here, what we know is that the buyers are in control above this level. We know the risk level is defined by, in the short term at least, by this level right here, which is 0.5683. If the price moves below that level, I would expect that we would see some disappointment on the failed break right here and a rotation, maybe some probing down to this level at 0.5669, or potentially even back down toward the 200-hour moving average. That would be the potential target on the downside on further selling pressure if this area can't hold. If the level does hold, then we have the potential to continue this move to the upside. The obvious next targets would be this high price right here, coming in around the 0.5704 level, and then we look toward the January 24th high, which came in at 0.57227. So overall, what we can say, however, is that the New Zealand versus US dollar is showing strength. We have a risk-defined level. We know where that's at, and we have targets on the top side. So let's see if this momentum can continue. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.